Financial crisis, and just over a year after stock market lows, U.S. markets and the economy, we've got them both bouncing back with uncertainty about Europe out there. Is America right now the very best place for investors? And what's the best way to invest your money here? We want to ask Jason Pride, Director of Investment Strategy at Fundmead, and Harry Rady, CIO at Rady Asset Management. Great to see you guys. Harry, what do you say? Are you going all American here?
You know, it's I think a mix of the two. You know, I think it's time to shift away from the beta rally, and you know, we're taking a bit of more of a defensive approach, but we don't think that it's got the defensive characteristics. We're investing in nuclear-focused utilities. Many of these stocks are down 50, 60, 70%, trading at decade-low valuations. In addition, we're taking a contrarian bet on natural gas-focused exploration and production companies. These stocks are down 50, 60, 70%, and we think in both cases you're getting to buy world-class assets at 50 cents on the dollar. So, and we think that they're late cycle plays. They've been left for dead, but we think that good news is just around the corner.
Okay, back to this issue here, Jason, of the U.S. versus the rest of the world. It's something that we've been talking a little bit about as of late. When you look at the uncertainty in Europe right now, when you look at the struggles that they're facing, the U.S., in comparison, is looking pretty darn good to some folks. Is this going to help this rally really get its next leg?
So we've been saying this for quite some time, is that, you know, we do have a lot of headwinds facing both the domestic economy and the international economy, the main one of which is the debt overhang that exists almost across the board in developing markets. But the U.S. is doing
got one
a
here
much...
too, right?
Right. We have 70% debt to GDP in this nation. The consumers are not exactly, you know, sitting clean with their balance sheets. But we don't look as bad as Europe looks on aggregate, and we're not having to face it immediately like countries like Greece and Portugal and Ireland are having to right now. So on a near-term basis, we think the U.S. actually looks a good amount better. Having said that, there are differences across the globe. When you actually look at the emerging markets on the whole, economically speaking, are actually looking a lot better. In fact, many people are talking about them even being perhaps a little bit overheated. I think this is the near-term scenario. Longer term, we start to deal with a lot of the debt issues.
All right, gentlemen.
Gotta leave it there.
Yeah, sorry, a little short today. Got to leave it there. Thank you very, very much. When we come back, a CNBC exclusive with